The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Here, and let me just finish this if you don't mind. 2 seconds. I just need to do this. Okay. I had a very busy morning, and I'm just trying to accomplish all the things that I like to do. 1 second, and we are done. Okay. So, within the context of markets, what we're looking at is the H pattern in the Chapman wave methodology. It just continues. H's can go to a lowercase h, can go to a lowercase m. We're talking patterns. Had a question about, can I talk a bit about waves accuracy in futures versus stocks? You take into account gaps on intraday charts. Thanks. Yes, I do. A gap makes no difference because if it's in the direction that you're going, it just continues that leg. I think that answers that. And I use it on every single medium, even if it's the weather report. I look at the chart and I try to assess it and I count the waves. And in the summertime, you'll be surprised at how many times you get not just a D, but an E. Occasionally you'll get an F. Mostly it's a D or an E, and then the weather cools down a little bit. So let's do this, and I'll show you exactly what I'm talking about as we move along. In the Chapman wave methodology, you look for the most identifiable lowest low bar, and then you merely count each successively higher peak and label them, uppercase on the upside, lowercase on the downside. And the objective is to get you to the fourth peak. It goes from a buy signal. Sell modes invert to buy signals and then buy modes. That's how they reverse course. When you get to either a very strong leg B, could happen in an A, but if it's a strong leg B, that suggests that you've gone from a sell signal from a sell mode to a buy signal. And if the stochastic and the MACD or the chart formation are very strong, as you go into leg C, that says you're probably going to go to a leg D. A's and B's are where you fail in the arch formation. Like you managed to get to a C here. It's unusual to go to a C, but in a daily chart, in a very big move, yeah, that can happen. So as we do this, I'll explain what we're looking at. If you look at 1784.25 in the E-mini, the low that was made back in, was that in May? Couldn't have been May. That must have been in February. What happened was, that wasn't, the low, it says 1775, but in fact, this is a continuous contract, so that'll get changed. It was the low that was made the week of the 12th of February. If you count each successively higher peak, you go peak A. That was right on the 15th, the week of the 15th of April. Then you get a pullback, and then you get leg B. The moment it goes 25 cents past peak A, it starts leg B, and that's called the floating ledger until it makes a peak, and it did that the week of the 10th of June. That's B, and then it had one week of pullback, and went on to a leg C at the week of the 24th, pulls back very sharply, and rallies all the way to the very interesting round number. Is that going to work now? 2185 high that was made the week of August the 26th. And since then, we've come down, and we've made the pattern that you can see here on the left in the daily. You can see it magnified in the weekly by just single weekly bars, rather than this complex move here. And it suggests that the 9-period moving average is going to be strong resistance, and that at some point we should be testing the low that was made on the 16th, the week of the 16th of September. Okay, got that out the way. Now I'm going to do some other things. And as we do it, you're going to be absolutely surprised at how decades ago, I came in hand charting, I came across this incredible principle that has worked so many times. People here have seen it, not hundreds, not thousands, but tens of thousands of times in my, 2003. So we've had 13 years here at TFNN. So we're looking at the Dow up 70, It's continuing this arch formation. It's a little bit clearer in the chart that I was looking at before, but I'll show it here. Another arch is probably forming right now, unless it's a spectacular move that takes you above 18,400. You close above that, you're probably going to tackle 18,449 very quickly, starting a very big move to the upside. Those are the parameters. If by Friday starting to move down, you're testing the 18,120, 18,100 level, then we're making that arch formation. All right, the S&P, SPX.X right now, it is up 6, lagging the Dow. The Dow, even with Intel down, the Dow's up 0.39, the S&P's up 0.28. Very interesting. Now what's going to be important is that the S&P needs to take out the high of the 14th of October of 2149.19. This is the cash index. So far, it's holding the 9-period moving average, but to me, it just looks like a bounce within a lower highs and lower lows context. Okay? And support has to be at the 2138.35 level over the next few days. And let's go to the QQQ series, down 2 cents at 117.84. I've got this as a potential arch formation, and we're going to watch this really closely because there's a potential here for a peak E. First time we've got a signal in the weekly chart that suggests that there could be time, maybe not price, but time to the downside. Now, so I'll give you the parameters. The QQQ series, the NDX 100 trading vehicle, needs to get to 118.50, about 70 cents higher, to really show that it can retest the old high. But believe me, a close into the gap of 117.50, just 35 cents lower, and that would say, uh-oh, be real careful. Lower highs and lower lows are probably coming. Now, this is going to be very interesting. When I go to the IWM, IWM is just looking terrible. It is very, very weak. Let me move away the 120-minute chart. Oh, I wanted to show you this. The 120-minute chart was why I wanted to talk about the peak Ds. I've drawn this earlier for my subscribers to my opening call where we have where I give a very comprehensive look at the markets every day. I discuss all the different indices of importance, what we're looking at. And I suggested that there could be a leg D in the E-mini if it goes above 2139.75. And I said 2141 has tremendous resistance at the 200-period moving average in the 120-minute chart, in the weekly chart, 9-period exponential moving average, and in another moving average here on the daily chart. And that's where we've stopped. Now, what's really important about this, if you don't mind, I just want to show this for the folks who use the E-minis during the day. We've made a peak F, and I believe that this peak F is a peak F of consequence. And I'm going to just... I don't want to do anything very quickly here. Yeah, I'm calling this a peak F with a little inverted V-shaped hat right there. And that caret suggests that the E-mini should at 2139 with a top of 2141.25 is probably going to test the breakout level on the left. Look at this perfect left side, right side price time match with an inside wedge target zone. Amazing. But it did make a peak E and then pull back very sharply at 9:40 this morning from 2137.25, went down to 2132.50, no, 25. So this is going to be very interesting because now we're going to see whether or not it's done for the market's done for the down, the upside. Now it's just going to consolidate as it rests. Now I'm going to show you as we go out. I want to show you the crude oil having made that leg Z. Oh, this will get back. Don't worry, we'll show it to you. There it is. We'll be back straight after this message. And not only that, I'll show you the dollar needs a leg D. Be back. Basil Chapman, Tiger, Dow's up 60.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. In this chart that you're looking at right here that says Introducing the Chapman Wave Methodology by Basil Chapman, chart analysis in the stock market, available at TFNN. It says find, and I'm going to type in here peak G, and then I'm going to say find. So synopsis of the process explains exactly what the peak G is, the seventh highest peak possible before recycling higher. It discusses the rare peak G, the implications. That's the seventh higher peak that I talk about. Let me just use this. Keep going right there. The next one is peak G. Where's peak G? Should be highlighted. Hey, what happened? I'm just going down step by step. All right, this is it. Let's continue here. In that context, you will see charts noted for an up arrow all the way to peak G. It shows you here an example of the semiconductor index. Oh, believe me, would it love to be in the 1200 area, the SOX index. It ain't there right now, I can assure you that, especially with Intel pulling back. So it discusses the rare peak G and what it does. It has a whole chapter. Let's just go on, peak G. There it is. There's a peak G, another peak G right there. It's unusual. And I'll just keep scrolling through terminology, sell signals, the G top. I discussed letters above peak D, G, chapter 5, buy signal and buy mode, what happens with the peak G. And the reason why I'm doing this, I'm going to show you something very interesting. Okay, the notation of the rare peak G top has an inverted V shape. That's that pattern right there. And why I'm discussing it is if I've always said that if you have a robust methodology, that methodology should be capable of embracing many other techniques. And here's the sell signal peak G. Then I have a whole chapter 7b, on the rare peak G and what you can expect. And the reason why I always say it's great if you can short at a peak G is because if you go 1 penny higher, you recycle. But this is the interesting thing. Often you'll recycle to a D. Well, D is where you've got to be careful as well. So there's a whole bunch of implications that go with it. So for me, it was a very special thing when I finally discovered. Of course, I talk about it in terms of trial and error, the School of Hard Knocks and the Graduate School of Hard Knocks, then the Postgraduate School of Hard Knocks, the Doctorate in Hard Knocks. That's how we learn, and hopefully you don't keep repeating the mistakes. So the reason why I bring this up is that tonight Steve Rose is going to have a webinar, and in that webinar, he'll probably talk about the seventh wave, which he's embraced and he uses in his own methodology to as a technique. And it's I thank you, Steve. It's a great compliment that you've found that the technique that I've used, one of the umbrella units that's very important is the use of what happens on the seventh wave. So it should be a really interesting webinar. I recommend that you do consider taking it. And of course, Steve is a font of knowledge when it comes to all these different techniques. So now here's something that I want you to talk about. The leg D. Remember, the requisite is to get you to a D. Well, lo and behold, today crude oil just spiked. It looked lousy for 3 days. It just wasn't going anywhere, but it made the potential H pattern. What is the H pattern? Let me just go there. This is a chapter 17. And that is what we used to call, I still call it the dreaded HY, because if it breaks the left side low, it is going down. And if you're long, you are wrong. So this is chapter 17. And what does it look like? It looks like this here. And if that keeps coming down, you can make a whole series of these H patterns, lowercase h, that breaks the left side low, until eventually you might be making a large arch that goes to the lowercase M formation. What's the importance about that? Hey, you want to know importance about that? That's the 120-minute chart with those H patterns that go to an M. This is the Dow 120-minute chart. So here we go. Let's go back to our what we're looking at. And we're looking at leg D now with a strong leg B in the weekly crude oil. And that suggests to me, and I've been saying that I think crude oil is holding very well. I think it's going to move higher. I'm not sure it's going to break the top that was made at 54.67 on the continuous contract. That's the week of the 10th of June, but it's acting really well at this particular point. This is the 120-minute chart, and lo and behold, it too went to a leg D. Isn't that fascinating? So D in the daily, D in the 120-minute chart says, watch this closely, because this is where you can have a little bit of a pullback. But wait a minute, gold should be pulling back, and gold is holding quite well. It's up 10 right now at 1273. So this is a dichotomy that fooled me a little bit, in that I was wanting to buy some gold a little later on after the testing of the lows. We broke under the 200-period moving average. We're stopping right at it in the continuous contract. This is leg B. And I was thinking that with the dollar strong, oops, I haven't done the dollar. So keep your eye on gold. See the way that this has gone up, gone down, and now it's bouncing a little bit. Look at the dollar. It's not yet making its leg D, but I suspect it's going to make leg D. That'll be weak. On the week D, it's leg D. On the daily, it's at peak C, G/C, but I'm absolutely sure that it's going to go above 98.17. So wait a minute, what's going on here? If we look on, if we're looking at the 120-minute chart of the dollar, it's really just gone sideways. It's not showing very strong strength in the 120-minute, the short term. So it's going to be a sudden pop to the upside that does it, if it's going to do it. But I'm suspecting that the MACD, which is very strong, the stochastic, which is 90%, is suggesting there's enough internal strength for the dollar to continue in this cup formation. And this is very interesting. There's a pattern that I love. It's not the cup and handle. I hate that pattern. It's the big thing in Investors Business Daily, but you've got to use it really well by identifying where you want to get in the cup, not as the cup's breaking out. Why? Because when the cup and handle breaks out, it invariably comes back and retests. That's very frustrating. In this particular instance, what we're looking at is this is a Chapman Wave cup and ladle with a breakout 1 bar late, 2 bars late for the left side, right side price time match. And that suggests that it should go to a D. It could even go to an E. But when it comes back, it's going to come back and test 97.57, the breakout level. If it doesn't even hold that, it just touches it and then starts running back up again, that's extremely bullish. If I look at the monthly chart, not the weekly, but the monthly chart, remember I drew in those two U-shaped patterns right there? Patterns that I used to call differently, but now I'm just calling them the double U-shaped pattern, 2 cups. Look, a break above 100.51 immediately takes you to leg D. And at that point, we've got to start being real careful. So we're very close, 97.86 2 points. I mean, 2 points should be no big deal in the dollar if it's done so well so far. We're going to be watching this very, very closely. Now, what we're looking at is within the context of the different indices, we need to look at bonds. And bonds have held the lows recently. And then we go to the TLT, which is the Lehman iShare 20-year T-bond fund ETF. Look at that 132. There's your trough 7, the trough G/C. Remember, we like to look at these Gs because that's where your risk is the best. I didn't want to go along that just because in the next 2 days I think we've got a really whippy potential for the market. But I'm liking what I see, having held this down channel support area, and I'll show you the down channel inside track, and I'll show you on the CD just where you will find it. I'll be right back. Basil Chapman, Dow's up 56, S&P's up 453. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I did the crude oil, and I had a question about rig. Someone had brought rig up a while back. Oh, that's right. Brent from California. He was buying it, nibbled at it, and it's done fantastic. It's at 10.52. It did spike to 1080 something. Was that 1088? Pulled back very sharp to 950, having a good day. Yep, rig is looking good. Remember what I said? There's this pattern, the H pattern, that could turn out to be very successful. I call it the Sears and Roebuck pattern, that if it makes the H pattern that's successful and the technicals start to strengthen and it can start to work its way above each successively left side higher peak. In this case, it needs to break above 1065. If it does that, all of a sudden 1303 becomes a focus. Now let's do one thing at a time. Just first got to break above 1088. Okay, but the monthly chart is starting to improve. So that was the question there. Next question I had. Well, I was about to show you something in my CD introducing the Chapman wave methodology. There's a technique I call Chapman wave inside track. I actually spelled it a little different now. It's inside track, 2 words here, and now I make it 1 word, inside track. And it is a sell zone or a buy zone. You see, what you do is you identify outer levels of highs that are the full wick and candle. I sometimes use the body if I need to, but what I do is, if I can lock in 2 very good, identifiable, especially 3 trend line levels on the upside, then I draw a parallel line. On the downside, I can use the body of the candles if I need to. And if it's the same thing here, so I typed in inside track, it took me to this one. I hit the little arrow to the right, find next. That explains the inside track. Here's another one. So the inside track has got, this is a repellent zone. This is the propellant zone, and it shows you every time you get into this little 3/16 of an inch area, the price pulls back. And every time it goes to the bottom, that's a good entry point. When it breaks down, it lets you know, because it breaks down decisively. So that's very important in my work, and there are a whole bunch of them that I discuss, and I give you exercises later on. So let's get out of that for the moment, and let me show you something here. What I was going to lead to is in the TYX.X, what we're looking at is there's been a very strong rally in the daily chart. The daily chart's gone to A, B, C, and then it hangs around, and then suddenly it breaks to a D and an E right here. Now, you could have said maybe that's a restart. I'm just going to be as simple as possible. That was a C, gets reactivated. That goes to a D, that goes to an E. And then it pulls back, and then it goes A, B, C, and lo and behold, what do we get? We get the D. It's just unbelievable how many times this can help you identify what do I say? I say at a D, it's where you lift your foot off the accelerator, hover it above the brake pedal, because other things can happen. They don't have to happen, but that's where you want to look at it. And lo and behold, what we're looking at is that the 30-year Treasury bond interest rate is at a peak D. It's snuck above the 200-period exponential moving average. When last was it there? Way back in January of this year, January the 12th is when it broke down from that level. This is the first time it's gotten close, but this is the first time that it's actually hit it in this little period right here in October. And that suggests, and this blue line is the 200-period simple moving average. This is the 200-period exponential moving average, and this is the 9-period. So there's a cluster formation here that's saying stochastic at 87% is good, but it's turning down. The MACD is strong, but it is flattening out. That's the histogram starting to narrow. That's the distance between the 9-period differential, the green faster moving average, and the red slower one. So this is where you've got to just make a note to say, be a little careful in watching your interest rates. And that's the reason why the TLT has run off for the last 3-4 days to the upside, holding the 132s. It dipped to 131 for a moment. So this is going to be very important. Now, in terms of what we'll be looking for, we've already been through let me just move that. We've already been through the back and forth for tonight. Just let's make it real clear. I still believe tonight is a night of visuals. Yes, it's important about the words for us who really want to listen to what's going to happen, but for the majority of people, it is visuals. Anything, looking at the watch, sniffing too loud, smiling too often, all of these characteristics will just keep adding up for the third session, and that's going to be very important. And the wrap up in the last 15 minutes is probably going to eradicate anything that happened intra-session. So it's going to be really important. I don't actually care about what goes on. I care that at 11 o'clock tonight, going into, say, 10 o'clock to 11 tonight, that's where I'm watching the E-minis. That's where I'm watching the bonds. That's where I'm watching gold. That's where I'm watching the dollar. And going into tomorrow, we'll see whether the market feels really comfortable as the XLF says, aha, this is a friend that's going to come into play, and we're going to be pay for play, and it's going to be off to the races. And at 19.63, the XLF, the S&P financials, will break to the upside and go into the 20s very quickly. Maybe, who knows? I'm just throwing out some suggestions here of what we might be looking for. That's because the market just wants, market hates uncertainty about uncertainty. It always deals with uncertainty. So if tonight it feels that it's got a little bit of a directional move, we could see a move to the upside tomorrow. Now, let's just imagine, my thinking here is nothing will be resolved. This is a fascinating market, and it's a fascinating political scenario, and it's a fascinating economic scenario. Nothing here is going to be resolved tonight because we've got 2.5, 3 weeks of intense, I would say both sides have no clue as to what's coming up. So this is not a knockout punch tonight. So as we're going through it, I think the market is stuck in a range. This is my opinion right now. It's stuck in a range. We are short the Dow. We are short the semis. Look at this. The SMHs coming back a little bit at just down 58. But the weekly chart is what says to me there's a chance that this is going to be a leg F, not an alternate count F/B. There's the D. That would be E/A, F/B. And that we could have a pullback here. It doesn't have to be very deep. We could use time. And 63.06 was the low back on the 16th of September, just a month ago. So I'm anticipating that there will be some kind of a pullback. Intel, of course, came out with pretty darn good earnings, but the look ahead was not quite so great, and it's down 214 at 35.61, having made a peak G. Why did I want to go through that whole panoply of information on my CD introducing the Chapman Wave methodology? Because the peak G is a very technical aspect within the Chapman Wave methodology, and what it suggests is that there could be a sharp pullback, that you've used up all your energy, and once in a while, if there's an F and then you come down sharply, and then there's like a right arm extension, what I call the rogue wave to a G, that usurps so much energy for the downside as well as the upside that in fact you recover very quickly. But when it's a G that goes F, quickly G, in fact the G looks like it's an extension of the F, that's far more serious. And look what we've got. We've already got an A to B equals C to D. This is the one-to-one lightning rod to the downside. This is absolutely looking like a peak F on Friday. I'm probably going to have to put a down arrow, although I really like down arrows when the stochastic is closer to 82% or below 80%, and the MACD is cross negative. So the day is young on that. Now, what about the monthly? We'll have to talk about that, because if this is an F, that's really serious. If it's a C, Intel will go to higher highs.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Thank you. Nice little compliment we got there from the Dan. All right. The question is, what? And this is what I left off as we went to the break. And the question really is, could this be leg C, or is it an alternate count because the low that was made at 24.87 in August of 2015 didn't get even close to the 1923 start of the next buy signal, the former buy signal, which ended at 37.90 at peak E. Intel Core Semiconductors trading at 35.59 down 216. So the question is, what would make me consider this as absolutely a C and that we will go on to higher highs? Well, there are a couple of things. In this pattern that we're looking at, in the Chapman Wave methodology, there's a pattern that I call the drop buck pattern. It's chapter 22, right here. And what does it mean? Drop buck pattern says that you've made a top, you've pulled back, you've retested the top, keep thinking lowercase h upside down, inverted, right? And then there's a whole bunch of techniques that we use to define what would be a failure. And in this double top pattern, this is the double top pattern, I call it a drop back pattern. The reason is if you think of those backhoes, you know how they scoop up the sand and the dirt and the gravel and everything, and then they just open up and it drops. That's really what I was thinking there. So always it could be a little butterfly net. You can think of it any way you want, but it's an inverted H or a Y backwards. Fails at the top and it breaks down. My rule of thumb is that if it breaks 30% lower, it's going to go 50% lower. And if it breaks 50% lower from the top to the bottom of the cup, you're going to test that cup. If you break that cup and close under it, watch out for a 1-to-1 or greater to the downside. All right? So that there are a whole bunch of other things that go on, but I'm just telling you that for now so that we can go on to this pattern, which I'm going to show and draw for you right here. The plumb line doesn't fit. It doesn't matter. It's the idea that it is a cup formation. And this is I'd drawn this some time ago. I took it away because I don't like messy charts. I'd drawn the Chapman Wave falling axe formation. Chapman Wave falling axe formation. What is that? That's chapter 24, my CD. And then what happens is if you break to the upside, there's a really good chance you can go 1-to-1 as an extension to the upside. Now we've broken and we've held above it, and we closed above 37.90 in that move last month, where the close was 37.75. We have not closed above it. Oh, that's very interesting. 37.90, and we closed last month at 37. We made a high of 38.05, and we closed at 37.75. Just 15 cents away, but we did not close above it. And this month we went above it, and we haven't closed above it. Very interesting. This is exactly like the dreaded H pattern that we're going to talk about. So this is what I'm looking at. There should be a pullback, and that pullback can take the SMHs. So I'm looking at Intel. Could take Intel down to the 34.35 level, and that is the 9-period exponential moving average. My suspicion is because Intel really didn't say things were bad. They just said looking out. I mean, I think that's what I heard, that was just looking out. And that says to me that for now, at least, what we're looking at is a consolidation after a really big move. It was almost a gap up. This huge thing would have been an island reversal. It's not quite, but it is amazing that it gapped up, filled the gap, and then went even higher, and now it's gapped way through that. So this says to me that the low that we're looking at of 35.06, the day of the 12th of September, that's going to be a really important support. All right, so I hope I helped you there. That my thinking is that the MACD and stochastic in the weekly chart is about to pull back. The price action that I'm looking at in the pattern that I'm looking at says in the drop bucket formation, a close below 34 says be real careful, because you could go down 50% to the 32 level, 31.90 level, and then we might have to reassess. But that's the way I'm looking at it right now. And it's part of a very important industry, the semiconductor index. So what will change that? Somehow we've got to fill the gap, and I don't think it's going to be full just yet. And that gap would need to be filled going to the 37.46 area by within 10 days. Give it a nice bit of time. All right, so that's that. Question is ASML. I don't believe I have it updated. I used to do it. I haven't done it for a while. I've got a peak E with the H pattern failure. Oh, ASML Semiconductors Holdings NV New York, NV Netherlands, I think that is. So what? No, maybe not. It is what wave count? Well, the wave count has failed. It went to peak A, B, C, D. Look at this. How many times in all the years, if I just had to add up all those Ds, it would be unbelievable. Look, A, peak B, peak C, and then it just squeaks to a D, and then you get your down arrow, kaplop. It makes a lower low. Yes, ASML is in trouble. Short term, I think, short to intermediate term, I think it's going to be stuck in a range between 100, it's at 103.92, maybe between 106s. I think it's going to test the 99s over the next 3 weeks. That's what I'm thinking. All right, Basil, can you look at PBR? Oh, what is this? Public Broadcasting? No, PBR is Petrolia Brasilia. Oh, man, look at these things. It's gone to the 200-period moving average in leg F. It could have recycled, in fact. In the weekly, the monthly is down a huge leg B. This is a stock that was trading at $2.71, and now it's at $12.01. Oh, let me count the waves. This is the wave 3. I'm sorry. There's wave 5 right here. There's your down one. There's your down arrow. Trading at $12.01, up 23 cents today. A beautiful move. We've had people calling about this, and who will long, and I have to say congratulations. It is a spectacular move. Yeah, this is a spectacular move. And what would happen then if there is a consolidation, having hit the 200-period exponential moving average in the weekly, it'll mess around here. It'll sort of struggle to go to a D just slightly above 12.15 to 12.27, say, and then it comes back and retests. But now what it's got is fabulous support in the $10.20 to the $9.80 area if there's any very sharp pullback. This is a good sign. Petrolio Brasileiros. No, Brasileiro. SA. Wow. Okay, Brazil, I believe. Yep, Brazil. Yeah, acting very well. So now let's do the next thing. Someone asked me, all right, I'll show you quickly. Here's the, that peak F is still in play and trying to rally. I think that most of the move today has been done, that it will just kind of fade out towards the close. This is what I'm thinking. Yeah, that's just what I'm thinking. Geez, that's that question. Oh, MS, Morgan Stanley question is, what is the question? Bob wants to know wave count. Wave count is Morgan Stanley. Did I just do that again? Yeah, I did. So MS is Morgan Stanley trading at 32.50. Oh, look at this pattern. I did not do this. I was going to update it. I lost the data. Oh, it's there somewhere. But there was a day recently where I had to shut down because I had something happened. And as a result, this is D in the weekly. There's only leg B in the monthly, gray B because it's way under the previous high. But this move right now, oh, I need to do it, huh? And what have we got? We've got a break coming up now. A, B, C, D, recycle. A, B, C, D, A, B, C, D. Oh, isn't that interesting? Yes. Let me just double check this count. Very interesting. Morgan Stanley, I want you to look at Goldman Sachs. Good idea. We'll go to some of these financials. Basil Chapman, Tiger Dow's up 63. Yep, S&P's up 5.61. I'll be right back.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So we're looking at Morgan Stanley. MS is a symbol trading at 32.55 up 23 cents. Everything about this move right here, excuse me, let me just have some water. So everything about this move right here suggests that maybe this is an E/B, F/C, sharp pullback. This is a brand new A to B. Why? Because there's a W formation in the MACD. Stochastic looks like it's running, but I'm going to leave it as it is, and I'll tell you why. There are 2 reasons. The stochastic's below 80%, it's at 63, and the MACD could deflect lower, and the relative strength index right there, although it's rallying, is not all that strong. It's not as strong as it should be. So I'm just going to let it play out. This is one of those cases where I don't have a position, and the analysis is that I could this or I could that. And I'm just saying, you know what? It's acted really well. It seems to be slowing the upside momentum in the weekly chart. There's more like an arch formation that's unfolding. So let it prove itself. So I do not. Now, the question is, I'm long. What do I do? It's real easy. Just raise your stop on a part of your position. It's acting really well. The MACD and stochastic and the daily are very good. Monthly is acting price-wise beautifully. It's right in the 200-period moving average. All I would do is I'd raise my stop on a portion. Why? Because we're going to come into with the XLF look. I'm going to go to the BKX index. BKX index. Whoa, strong move today. Very nice. So that says I would just raise my stop on a portion of Morgan Stanley and let it tell me what's going to happen. This is a really good bond. It looks like it wants to go to leg D, F/C at 73.58. It looks like it wants to go to D. Let's look at Morgan Stanley. It was at a really good day yesterday. A follow through leg C today. What do? Leg C weekly. And I'm watching this. I did a lot of work over the last 5 days, 6, 7 days, almost a week actually. I've just been doing work that I take my monthly and long-term charts and all that, and I did a chunk of work, and I'm going to be having a webinar. Now, of course, you've got Steve tonight. You've got Larry Pesavento next week, I believe it is, and I think it's the following week, am I? First week of November. You'll see it on the front page of TFNN, and I'm talking about what the election, what I'm doing work before the election. And I'm going to explain to you the parameters, what we're looking at, why we're looking at it, what I am anticipating, and what levels to look at, the boundary lines, all sorts of things like that, to suggest plays that would be appropriate immediately after the election, and what could unfold, and why there are certain positions we've taken right now that we're still staying with. Because although we don't have a high degree of comfortability, we have the Chapman wave methodology that says this is the time to make it. And what do I mean by that? I mean that, for instance, we shorted perfectly based on the Chapman wave methodology, Ulta, A-U-L-T, Ulta Salon, one of the best stocks in the market. We shorted it the day after its top. We're going to do it at the top. We gave it a day. At 270.11, it ran all the way down to 234.55. And then I don't know what the heck the news was, but it had this massive short covering rally. We got out at 255. It's now at 254 right there. It's the same place. And because there was some news event, but we made money, not as much as we would have, but that was based on the Chapman wave methodology. We have shorted the SMHs based on my methodology. It's the same sort of thing. Is it going to be correct? I don't know. We can just follow it. And I don't know yet if it's going to be a peak F on Friday or if it's an alternate count. But it's saying to me that there have been some massive moves in certain sectors. And therefore, you've got to look at those stocks as being potentially weak. There's another stock. I don't even know how it's doing today. I'm going to show it to you. EW, Edwards Life Sciences, one of the most fantastic tissue heart valves. And we shorted it off the top. And it's pulled back very sharply. Is this going to be a more serious pullback? I don't know. We can just use our methodology. So that's what I'll be discussing in the webinar coming up in about 2 weeks. Hey, thanks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.